All right, good morning, everyone. It is 8:35 in the morning of January the 6th, 2022, and this is my pre-market strategy session. So the first thing that I have up right now is FRLN, Freeline Therapeutics Holdings. Essentially, this is a small cap biotech. It has 35 million shares outstanding, and the float is 33 million shares. The first thing that I want to call your attention to on this thing is a misleading headline. The headline says, Freeline Therapeutics Holdings investigational new drug application for gene therapy gets FDA clearance. Gets FDA clearance. Now, that is a misleading headline because when something really how do I put this? When a drug is approved, people who don't know will conflate this, or this headline somewhat conflates this with an approval. So if you go into the details here, you'll see, and as soon as I saw this headline, it catches my attention. I'm like, ooh, FDA clearance. But you got to look into it because that doesn't mean it got a drug approved. What it means here is Freeline Therapeutics Holdings said Thursday the Food and Drug Administration cleared the company's investigational new drug application. So it cleared the new drug application. And then if you go down further, Freeline said it started the phase 1/2 dose finding trial at the end of 2021 in Europe. All right, so this is a flashy headline. And, when the news came out, I suppose, the stock, ran up, which it did. Here we have it on the 10-minute. I put a Fibonacci on it, the previous close is at $100 or $1.97, something like that. Let's see. Let's look at the settings here. The previous close, $1.97. So 100% we put it at $3.94. Pre-market, it made it up as high as $3.30. It's nice to see it make it past the 50% mark, but I seriously doubt this thing's going anywhere else today. There might be like a gap and go in the morning. But this is, I have absolutely no intention of trading this at all whatsoever. This is going to be a trap, essentially. I can't really give out any trading advice or anything. I can't tell people what to do. But I know for me, there's no way in hell that I'm trading this. I mean, unless for some reason, it just starts to skyrocket toward $10. Like if this thing makes it past $5, I would be I am extremely skeptical. Like, my level of confidence in this thing staying, or moving above $5 is less than 1%, less than 0.1%. This thing is just. It is going nowhere today. I mean, I could be wrong. I doubt that I am, though. This is just a trap. So I'm putting this one out as a warning. Just stay away from this thing this morning. Again, I could be wrong. I mean, who knows? But I seriously doubt this thing goes anywhere. All right. WBA here. This is an interesting thing. This is Walgreen Boots, and they put out earnings here. You can see earnings. That's a pretty good beat, on this thing's. I think this thing's. It's undoubtedly a large cap. It has 865 million shares outstanding at 50 some dollars shares, almost $60 a share. So that puts it in the range of nearly, I'd say over $50 billion market cap, right? So let's see, market cap 40 right now. As of right now, it has a market cap of 46.6 billion. So pre-market it's up 4%. So that extra $2 or so could push it. Yeah, it would push it up past 50 billion in market cap. Pretty impressive. So there are a couple things going on here. One, I could put a Fibonacci onto the gap. I don't really think that's appropriate for this one. Here we've got some gap downs happening here. So let's see here on, is that 2nd of April 2019. I've got this gap down here, closed on the 2nd of April around $63 a share, and then opened up again the next day at about $55 a share. So about an $8 loss per share there. And so technically this is the top of the gap up here in 63, but as traders go, traders tend to use the nearest low to find resistance in the gap. So there is some resistance right in here at $59.57. And you can see the open right now, if it opened, it would open right here, still below the gap that occurred on the 2nd of April. On the 2nd of April. So this is actually the 1st of April, that's the 2nd of April. Okay, so interesting spot for it to open up. You know, I like gaps a lot, and seeing it open here looks like a pretty good spot for it to open. It might dip down a little bit at the open, and so it's going to be one you just kind of have to watch. So I'm not going to put a fib on it. I am going to put a marker on for the open. So when this thing opens up, I'm going to put a marker on it, like just a straight line here, so that I know what price it is. And then, so if it dips down and then moves back above its opening price, that'll be an entry. And I will be looking for it to tag some of these spots that are previous gaps. 56.80 is from another gap back here on. So let's see. This is January. Okay. So here's the April 2019 gap. Here's the January. And here's the January gap. And so things get kind of tight in here. You know, let's see, the top of this gap right here, or I'm sorry, the bottom of this gap right here corresponds with sort of the lowest point right here. So in my opinion, in a hold, a move above 56.80, and then confirmation of support at 56.80 will be a green light for 59.57 as well. So it's one, you know, if you know I love gaps. If you know how to play gaps, these are the gap levels. So I will be looking for support and resistance at 56.80. If it just blasts through 56.80, then I'll look for it to pull back and get support at 56.80 and then move forward. If it hits resistance here at 56.80, then I'll look for it to dip back down below its open and move above its open again. So there are a few ways to play this one. Exactly how it plays out, I don't know, but it is bullish. I mean, it's made a tremendous move. And it's entirely possible. I've seen this happen a few times after really big earnings reports that it'll just sell off. It'll open up and sell off, kind of like, I don't know, like it did on this day here on, it's a really good example, actually. So here on the 1st of July, just a few months ago, 6 months ago, had another really good report here. Surprise on earnings, 18% upside surprise, and on revenues, a 1.6% upside surprise. But then look at it. It opened at $51 and it closed at $48, right? So as far as risk goes on this one, it's hard to say. Yeah, 23% upside on earnings and 3.10% upside on revenues. Those are both pretty good beats. So, yeah, we'll see. We'll see what happens. It's possible it could just totally tank for the rest of the day. And that's kind of it. There's the SPY that I'm keeping an eye on. Big down candle in the SPY. To call this a reversal, I don't know. I wouldn't really call it a reversal. It's just a big down day. I mean, there's a whole bunch of this run right here is like a 6% run in just a matter of that's 5 days. yeah, 5.79% run in 5 days. You know, and so now people are coming back from, you know, vacation or coming back from the new year and stuff, and they're like, yeah, let's take some profits, you know? So the risk range that I have on the SPX right now is, let's see, where are my risk ranges? There they are. So let's see, where is, there it is. So really close to the bottom end of the risk range. I have the bottom of the risk range at 4,690 right now. So this is a spot to look for potential buyers. I think what I'm going to do, though, I prefer buying. It's just I have so much more experience with buying and selling the SPY that and the SPY is still, the SPX is still really tech heavy, right? So the NASDAQ is still considerably far away from its the low end of its range right here. And so before I get really interested in going along the SPY, what I think I'd like to do is I'd like to wait for the NASDAQ to come down to the bottom of its risk range. And then I'll look for opportunities to go along the SPY. So I think the SPX is actually going to dip down below this risk range significantly, while the NASDAQ reaches the low end of its risk range. And as it does that, you know, I'm just going to sit on the sidelines as far as trading the SPY goes. So then let's see. There's the SPY. Then there's Tesla. This is interesting here. So let's get some of this stuff out of the way. Let me open up the daily here. Tesla did a break above this trend line, and this is kind of the way it goes in my experience with downward sloping trend lines, and there's a break. It tends to have this, I mean, really big, exciting move up, and then it just fails. So that doesn't mean that it's bearish. It doesn't mean anything really. It just means that this was the trade. And I did manage to get in on this trade right here on the 3rd of January. Is it Monday, I think it was? Yeah, I'm pretty sure, yeah, it was Monday. Yeah. And that's the move I was looking for. So it made the break in the pre-market hours and then opened up, dipped down a bit, and then just went for 1,200 here. So there are a couple things going on here. The Fibonacci, I put a Fibonacci on this thing back here on, let's see, what is this? The top of the Fibonacci is on the 25th of January, 2021. And the bottom of it is at the 16th of November of 20. And so this is sort of a consolidation area right here. Consolidation area, then breakout. And I didn't trade Tesla. And in fact, I only just started trading Tesla very recently. And so now this Fibonacci's done a pretty good job of predicting the price action, where the bounces and where the resistance is going to be, throughout this period from January 25th to the 5th of November 2021, 11 months later, a little bit more than 10 months later actually. And so now it's put in this downward sloping line. Here's support, a real strong area of support right here. And so what happens now, I don't know. I really don't know. The play was for a burst above this trend line. It definitely put it in. And it was only worth a scalp. It wasn't like this thing was gonna break and keep going. This was just a break above and a scalp. So it's gonna have to do something. I don't know what it's gonna do next. I mean, it's really hard to say with these downward sloping lines. I mean, because it could go. I've seen it do all sorts of things, like hold on there for a while, then go, or then hold on for a while, then break down, and then go, or hold on for a while and then just keep breaking down. It's just, there's really no telling what's going to happen. The trade really was on that break, the break of this downward sloping line. Then after that, it's kind of anybody's call. All right, then IMMX is another one that I've been keeping an eye on. And so I'm just keeping an eye on SPY, Tesla, and IMX, and MYNZ too. I want to recap that one from yesterday. And what we have going on here on IMMX is somewhat of a bull flag. It's definitely holding its price up here. It had a really good news. What was that? The 3rd of January. It had a really good headline. Where was it? 3rd of January. Here we are. Okay, so it's been granted a rare pediatric disease designation. IMMX said Monday that the U.S. Food and Drug Administration has granted rare pediatric disease designation to its drug IMX 110 to treat the pediatric cancer rhabdomyosarcoma. The designation is intended for serious and life-threatening diseases that primarily affect fewer than 200,000 children in the U.S. The company said that if a new drug application for IMX is approved in the U.S., it may be eligible to receive a priority review voucher from the FDA. IMX 110 is currently being evaluated in a phase 1B/2A clinical trial. Shares of IMMX Biopharma gained more than 55% in pre-market. So this is holding on to this price level right here after it popped up. Yeah, I don't. It's on watch. If it starts breaking above $8.68, then I'll start trading it. But for right now, it's just on watch. And the last, so this is the one that popped up yesterday morning, and a decent headline. Let's see, what was it? 5th, there we go. Oh yeah, okay. Maine's Biomed acquires exclusive rights to mRNA biomarkers for potential use in cancer detection tests. So this thing it has acquired some rights to those biomarkers, and essentially it's going to be a matter of whether they can translate that gain of those rights into revenues, essentially, and then earnings. And so yesterday, yeah, I was skeptical on this one yesterday. Pre-market here, it popped up above its 100% mark in pre-market, which is, it's like really good. But then it just started selling off, and it just really basically sold off almost, it sold off in the first hour of trading, and then made a bounce up above the 50% level, and then just tanked. Look at that big red candle right there, and then just went sideways for the rest of the day. There was a trade on this right here, and it was this spot here above the 50% mark. I didn't after watching it, just kind of really sell off and go through the levels and stuff, and not really be a well-behaved stock. I forgot about it. I didn't even look at it again for the rest of the day yesterday. I just figured I'd go back to it again today. And I was skeptical about how this one would do because the acquisition of those rights, those biomarker rights, might beef up their balance sheet, but it doesn't matter until it turns into revenues, earnings and revenues and earnings, however you want to put it. All right, so broader market kind of area here. We got the VIX. Let me go to the 10-minute. Yeah, so the VIX is a bit elevated right here. You can see this is the support and resistance line down here on the red line. Just bounced right off of it. It's been failing, and each time back here, each time it would go, 1, 2, 3 strikes, it would pop up again. And so back here we've got 1, 2, and then 3 strikes, and you're out, and it's like, and then it's like zoom, right, on the VIX. This is getting to a point now on the VIX where it's starting to make higher lows. The VIX really needs to start coming down and breaking down big time for things to get bullish. Otherwise, this trend of being, the higher lows, that's where things get sketchy. That's where the danger starts to happen. So I imagine that here in the next couple of days, it'll come back down and try and get down below, this support and resistance line. Hopefully it does it. But for the time being, until it starts breaking down, I'm not going to be looking for any trades to the long side on the SPY. Then I still have this one. I don't know why that's up. That should be crypto. Yeah, it is. Okay. Okay, and so now here's crypto. Here's Bitcoin, which is like the main player in crypto. And it's interesting. This green line that I put in kind of is somewhat of a decent predictor here of what's going on. So it's range bound, in my opinion. Bitcoin is range bound between 53,000 and 42,000 right here. If Bitcoin starts to break down below 42,000, then the next area of support is going to be around 33,000. I think that this is just the start of the next sort of move. I think it's going to catch support down here and then move back up and try and get higher again. And I think it's going to be range bound for a while. I don't know how long that's going to be, but for a while. And I'm not looking for a trade on it either way until it breaks in either direction. If it breaks down, then I'd be looking for a trade to the bear side below 42,000. If it breaks up and holds above 53,000, I'd look for a bull move, look for a bull trade on it above 53,000. But until that happens, this thing's going to chop people up. It's just going to keep mixing people up in the blender. All right, then that's pretty much it for this morning. So not a heck of a lot going on. EAR just popped up. That's interesting. Let's see. Got something that just popped up here. What's going on with EAR? That's definitely a nice run. Launches Eargo 6 hearing aid. It's on the 5th. Launched its new Eargo 6 hearing aid capable of adjusting to sounds in the user's surroundings. Eargo 6 is the 6th generation U.S. Food and Drug Administration Class 2 exempt hearing aid. Okay, so that means when something's exempt, that means that there's already, like, the FDA has already approved so many things like it that it's like proven technology. So it's exempt from the clearance. It was designed to instantly modify the settings to ensure optimal benefit without requiring manual input from the wearer, according to a statement. All right, so yeah, pretty good. Let's put a fib on it and see where it lands us. Ooh, and there's a gap. Ooh, a gap. So let's see. This is I'm going to call this the bottom of the gap, although I know it's not technically the bottom of the gap. $10.63, and then the top of the gap, I'm going to put it right here at $19.25. If it can get over 1063 and hold 1063, then it's on its way to 1925. Interesting. Okay, so let's go with let's see. Yeah, I'll go with the daily here. So its previous close. Let's try that again. Previous close was down here, $4.54. So a double puts that at $9.08. All right, let's look at it on the 10-minute. Yeah, so right now it's working on its way above the 75% level here, and it's definitely looking promising. I'm kind of surprised though that this thing just started trading. This is news from yesterday, and this thing just now decides to start trading, which is odd. Because if the news from yesterday, is what this thing's trading on, then it should have been popping up yesterday. So let's see if there are any new headlines here. Okay, there's an 8K that's been put out. Ooh, I have to go through the 8K. Extension, taxonomy, extension, label, link base. I don't really have time right now to go through this 8K and their attachments. It doesn't kind of give it to me in a nice, neat package. Let me see. Let's go to stock tweets real quick. Oh, I got to get going. All right, I've got to get going. All right, good luck out there, everybody. Click like, share, subscribe. leave a comment, tap the bell, keep your wrist tight, and I'll see you at the recap. I am out.